Hello everyone and welcome to today's webinar event. This is Wesley Sinks joining you today from the NinjaTrader ecosystem. Before I get started, I'd like to do just a quick test of picture and sound, so if you could please type a Y in the room, let me know you can hear my voice and see the projection in the room. Alright, thank you for that quick confirmation and thank you all for spending time with us today. We do have a very special event in store for you. We have John Skelton in the room of Apex Investing Institute ready to give you guys a wonderful presentation. NinjaTrader ecosystem is pleased to sponsor these weekly partner events as a value-added service for our clients. These events are intended to provide increased exposure to the various trading styles and methods taught by our partners. So if you do find value in these events, we hope you will attend them on a regular basis. Also, please feel free to stick around for today's NinjaTrader training events that we have throughout the week. I did provide a link to those training events, and I'll provide that again at the end of today's presentation. You want to take a look and learn a little bit more about the NinjaTrader platform. Now, real quickly, I wanted to ask everyone in the room a question. If you could, please choose the 1, 2, 3, or 4 on this full screen. That'll let me know your experience level with the NinjaTrader platform so far. And while you guys are filling that out, I just want to remind everyone, it's definitely important to remember that there are substantial risks involved in trading commodity futures contracts. You should carefully consider whether such trading is suitable for you, and that will depend on your specific circumstance and financial resources. It is possible to lose all funds deposited with your broker, and you could even incur losses beyond these amounts. Please inquire at brokerage support at ninjatrader.com for more information or for a copy of the CFTC full risk disclosure. Also, please remember that these ecosystem webinars are not a solicitation or recommendation, but simply educational in nature. All right, it looks like most of you had a chance to fill out that poll. I see quite a few of you in the room with a lifetime license and a few joining here today with the free license of NinjaTrader. For any of you that may be joining here in the room and not yet using NinjaTrader, I would definitely like to invite you to download NinjaTrader absolutely free. You can get started with simulated trading, advanced charting, market analytics, and strategy development. This free version of NinjaTrader that you can download from the following link has no expiration date, so you can use that for as long as you like. All right, so I'd like to thank you all again for your attendance today. Please join me in welcoming to the room John Skelton of Apex Investing Institute while he covers some of the advantages of learning a little bit more with Apex Investing Institute. So without any further ado, it's my pleasure to welcome to the NinjaTrader ecosystem room today, John Skelton. Take it away, John.
Okay, thank you very much for the introduction there, and thank you very much for having us on today. Hope everybody had a great trading day and had a lot of stuff going on in the markets the last couple of days here. And what we're going to talk to you about tonight is talking about expected moves of the market. I'm going to talk to you a little bit about that here, but let's go through and let's knock out some disclosures on our end as well so we can hop in and get rolling here. I know we've got just about a little under an hour and we got a lot to knock out, so let's kind of jump right into it here. My name is John Skelton. I'm with apexinvesting.com. Daryl Martin was going to be on with us today, but he had a family kind of last minute family engagement that came up, so I'm kind of stepping in for him here. So I appreciate y'all having me here. So you got to put up with me for the next hour here. So all right, let me just get rolling here. Give me just 1 second. What's going on? There we go. Okay. All right. So, as always, disclosures: trading futures, options, or any financial instrument involves risk. It may not be suitable for every investor. Apex recommends you seek independent advice before making any decisions. Information and strategies contained herein are the property of Apex Investing. May not be shared or distributed to another party without express written permission. And the contents of this webinar are not an offer or solicitation offer to buy or sell any particular financial instrument, and past performance not indicative of future results. So today what we're going to talk about is the expected movement of the market and how you can get it plotted directly on your NinjaTrader charts. We're going to talk to you a little bit about the power of diagnostic deviation levels that we use here at Apex compared to historic deviation levels. Some of you may be familiar with deviation levels and you use them in your trading, but these are not typical deviation levels. These are not historical. All right. This is based on the IV of options. All right. It's kind of, what does the market say that the market's going to do today? It's kind of the market putting its money where its mouth is. And we're going to talk about how you can learn that expected move how it can help you where to tighten stops, where not to take additional entries, what is the realistic expected profit, what are some realistic expected profit goals, and kind of helps you see where the highs and lows are so that you're not buying at highs or selling at lows. So I'm not going to bore you with a long history about me or any long sales pitches today. In fact, I'm not going to try to sell you anything. Actually, at the end, I'll give you a free special offer, how you can install our toolkit for Ninja for free to plot these deviation levels on your own Ninja charts. Okay, and they're available to over 22,000 instruments. All right, so you'll be able to use this. You don't have to switch over to some strategy or system that I'm going to teach you or show you. I'll show you a few of the ones we use it with and kind of how we use it and how they can be used with scalping strategies, day trading trend strategies, longer term trend strategies. But you'll be able to add it to your charts and to your current system or strategy that you use now. And use it in conjunction with that just to help you with what you already have. Okay, so it's not going to require any changes of anything. It plots right on NinjaTrader and can help you with what you have. So again, you're not required to use any Apex system. So stick around, learn a little bit about these deviation levels, and like I said, I'm going to show you how to get them totally free, no obligation, no credit card number, no special annual rate, anything like that. Okay? But first, I'm going to give you a quick review of Apex and a few of the systems that we do use on Ninja and how we use the deviation levels. Okay? So all of our here at Apex, all of our systems, all of our strategies, all of our indicators plot on NinjaTrader only. All right, we're, as all of you are, very much looking forward to NinjaTrader 8 coming out soon, and our programmers are hard at work making sure everything easily transfers over to Ninja 8. So any chart you see here today should be very familiar to you if you're a current Ninja user. Very easy to install our toolkit. In fact, at the end, I'll walk you through step by step how you can install it real quick and how to pop up these deviation levels on your charts in just a few minutes. Okay, so a couple ways we use NinjaTrader, some of our systems and indicators. We have several different systems that we use. One of our systems is our Profit Hunter system. We also use this with our special diagnostic bars, which are tick bars, kind of like Renko bars. But they're accurate to the actual tick. Some of you have systems you use like this for trending or scalping with certain moving averages, different trend direction, color changing, and so on. We also have our trend catcher system, which any of y'all that are familiar with Apex have seen this. This is more of you can use this for scalping or for longer term trading as well. This gives you more of the immediate direction of the market, okay? And like, for example, with our trend catcher system, it's basically the program, it plots arrows like you see. We've got down, we've got up, we've got down, we've got up or down, and so on. This is more of not necessarily a longer term, all day or several day longer term trading. This particular system we use here, the trend catcher system, is more, shows you the immediate direction of the market, kind of what's going on right now. Okay. You might also be familiar with our kind of flagship system, which is the Apex system itself, the APEX. All right, which is got green Apex, see the A, P, E, X. A is kind of alert, P is pivot, E entry, and when that's a green E and our MVP indicator also lines up green, we go long. Very simple. Okay, and this can be longer term trending as well. When it's red Apex, APEX, we enter on the second E. MVP is lining up red as well, we go short. Very, very simple. Okay, so no matter what kind of strategy you use or system you use, you'll be able to utilize some of these things I'm going to show you here today. Okay, a couple other things we use here is, here's a quick example of deviation levels. We're going to jump into deviation levels more here in a minute, but these deviation levels are plotted directly on the chart. The settlement is actually plotted from the previous day here, and we've got half +5 deviation, +0.7 deviation, 1 deviation. Okay, and here's just a quick example of deviations. As you see here, the market is only only 30% of the time will the market go past one deviation. Okay. So for example here, and this is one of the things we're going to talk about, and kind of why I was just giving you a quick example of some systems. You see here on this particular day, the NASDAQ, where settlement was from the previous day. And, oops, guys, give me just 1 second. Let me get that turned off here. Sorry about that. You see here, the market was at settlement from the previous day. Moved right on up to one deviation, kind of bounced there and came back down. Notice here right at the top, we got another entry on our Apex Elite system, right? Another E with the green lining up. Well, guess what? We would not have taken that entry, okay? And that's one of the things I want to show you about deviation levels. Is even though your particular strategy or system may be giving you an entry, maybe telling you to go long, we don't go long at a one deviation level, okay? That one deviation level, the market's only expected to go past that only 30% of the time, okay? So we're not going to be taking extra entries there. In fact, any positions we're already in there going up, we're going to be tightening our stop because we're not expecting the market to keep going, only 30% of the time, okay? And we're also expecting at these deviation levels, the market to what? Kind of do a little bounce there. And it may just stay bouncing there. It may pop up or it may come back down, which again, perfect example here, came back down, okay? Let me see here. Another couple indicators that we used, just going to kind of put this all together and piece it together here for you. It's what we call our expected range indicator. All right. As you see, we've got the deviation levels plotted on this particular chart here, but you see these boxes. All right. These boxes are what we call our expected range indicators. And as you see, each box represents an hour. Okay. And what this is, these are set on 60 minutes. So every 60 minutes, a new box is going to form ahead of time. And basically what it is the high and low. This is the expected move of the market. Historically, for this day of the week, for this hour of that day, this is typically the expected move of the market. The market doesn't normally go higher than this and doesn't normally go lower than this. The market normally stays within these ranges. All right, so not only can we see what the deviation levels, the overall moves for the day that's expected, okay, or the max moves that are expected, but we also use our expected range indicators to be able to help us determine what is the move over the next hour, 5 minutes, 30 minutes. We can select whatever time frame we want on these expected range boxes, okay? Another piece we kind of tie it together with, and again, I'm just kind of giving you some ideas of what we do here so you can kind of get a good understanding of how you might be able to add these into your own system, is our expected volume indicator. Okay, and again, all of these indicators I'm showing you, we use in Ninja. Our expected volume indicator, you see this yellow line here? Okay, that yellow line represents for this 4-minute time frame. Okay, each section is 4 minutes. See that? Basically, that yellow line is the expected volume for that time frame. This day of the week, this hour of the day, these few minutes of that hour. Historically, that is the volume over the last few months average that expected for that particular time. These blue shades here are the actual volume that's happening. Okay, so this yellow line is what's expected historically, what has been. These blue lines shows what actually is happening. So in this example right here, we have low volume compared to the historical expectations. Over here, when these blue lines are kind of busting out past the yellow lines, that means it's exceeding volume. Volume is exceeding expectations, okay? So what we kind of do there, how we tie that in, and I'll show you on this very next section right here. Check it out. Remember in this example here I showed you? See how the market, this first example, see how the market is staying in those ranges? It's kind of opening up, kind of bouncing up and down and staying within those ranges. But look what happens right here when volume starts to exceed normal expectations. We see it kind of busting out of ranges, right? See right here when it's a little bit higher than expectation, we see it start to kind of cut close to those ranges there. Now check this out. This is a completely different type of day, a completely different market condition this day. Check it out. It's blowing through expectations all day long. And look what's happening to our ranges. They're being broken. They're going past it. They're breaking out. They're breaking up. They're breaking down. Okay. So again, kind of the way we use that piece there is not only to know the total move expectation of the day with the deviation levels, but then we could break it down by the hour as well, or multiple hours of where we expect the market to stay in between. Okay. What does that do for us? Well, kind of gives us an idea of what movement to expect, what kind of profit targets to expect. It can help us with stops and tightening stops, but then also when volume starts to exceed, we know to expect some volatility there. Okay, and depending on whatever you're trading, whether you're trading futures, Forex, binary, spreads, whatever, that's kind of helpful to have all that information there, piecing it all together in conjunction with whatever your particular strategy or system is. Okay, it also does help, again, if we're doing short-term trading, not to be buying at highs or selling at lows. All right, here's an example of 3-hour ranges. The ones I was showing you a second ago were hourly, but we can make them 5 minutes, we can make them 1 hour, we can make them 2 days. All right, doesn't matter what type of trading you're looking at here. Very short term, longer term, hourly binaries, daily futures, day trading futures, scalping futures, whatever. Okay, we can put them as far out as we want, hour wise. Which again, let's say I'm only trading part time, or I'm only trading for a few hours. I can see the expected move. I can tie that into kind of my expectations of potential profits in conjunction with looking at not only what am I looking to do the next 3 hours, but where's the market at overall for the day with deviations. So let's talk about deviations a little bit more. Okay, just another example here of deviations plotted. Now we can use any type of bars on Ninja. It does not matter. The deviation levels are the same. All right, the deviation levels are determined from the settlement of the previous day, calculated a certain ticks up for half a deviation, 0.7 and 1, 2, 3, and then down. All right, so it doesn't matter. It doesn't matter if you're using tick bars like this, or if you're using 5-minute bars, 15-minute bar, hourly bars, does not matter. Okay. I'm going to show you a bunch of different examples here, but one thing I want you to see, again, perfect example right here, starting off at settlement, popping up to about a 1 deviation level, hovering there, and coming on down. Again, 70% of the time, or only 70% of the time, the market will move 1 deviation. Only 30% of the time will it go past a 1 deviation. So that's something for us to keep in mind, again, when we're looking at trading and looking at not buying at highs, not selling at lows, is do I really, if I'm seeing the market get up here to a 1 deviation level, am I really looking to take more entries right there? If I know that there's only a 30% chance it's going to keep going. I don't know about you, everybody has their different systems, their different strategies, their different risk reward ratios and probabilities and so on. I don't know what yours is, but I know for me personally, I'm normally in my trading looking for a little bit more than a 30% probability, right? So that is one of the biggest ways we use it there. Not only is that 1 deviation level pretty crucial, but even at the the 0.5 and 0.7, take a look at what the market's doing here. All right, check out how these are truly good kind of support resistance levels here as well. Settlement, soon as it gets right here to 0.5, like half deviation, like literally almost to the tick there, what does it do? Bounces, pops up, bounces, pop up, mount, and then what does it do? It finally breaks through from there. Okay. What happens again? Pops right up here to the 1 deviation. Boom, boom, boom. Comes back down, kind of bounces again off this 0.7, then comes back down. So not only do I want you to look at the overall whole, like one deviation moves that I'm going to show you here, but look at these little levels to know. So if I'm going long here and I'm coming up to a 0.5 deviation, what am I maybe going to do? I might decide to take my profits there. I might decide to tighten up a stop because I'm kind of expecting at a half deviation that it's going to bounce. And so I might either want to tighten my stop and take some profit, get out. I might want to, at half deviation, take out half of my profit. But I'm also going to make sure to realize that I'm not going to be totally just freaking out when I see some hesitation there, because I'm expecting it, because I'm at a deviation level, right? Or a 0.5 deviation level. I'm also a lot of times going to be expecting to see that same thing around a 0.7. Then when we get up here into this zone here, all right, the actual line itself is the actual deviation level. We have these blue shades in there. We kind of call it the deviation zone. It could be in that zone where you kind of start to see some bounce. When you get into that zone, when you want to start looking at, um, you know, tightening those stops and so on. Okay, so just 1 second here. So let's talk about deviation levels a little bit. Again, these are not the same as your historical deviation levels. All right, the deviation, we call them the diagnostic deviation levels. Basically, it's the IV of options for that particular market for that day. And we take the IV of options, we plug it into a special deviation formula. And it's kind of, what does the market expect the market to do going forward? Not the historical prices or pivots, not like historical deviations, but it's expected deviation levels. All right. Again, it helps us to know when to tighten stops or take profits, when not to enter again, when not to be buying at highs or selling at lows. Gives us realistic profit targets, not max profit or realistic profit. Or, some of you might be spread traders. Some of you might trade like Nadex spreads, and you might have minimum and maximum floors and ceilings. And is it realistic? Do you want to choose a particular instrument over floors and ceilings? And is it realistic? Do you want to choose a particular instrument over another one? Or a cheaper option there, when that max profit potential is not really a high probability, because that's not the expected move of the day. Okay, can also help you with reversal plays. All right, knowing that when the market gets up to a 1 deviation level, for example, that only 30% of the time does it keep going. So we have some traders that just use these deviation levels for reversal trading, meaning once the market gets up there to a 1 deviation level, they get some type of indication on their system of a reversal. They're going the other way, or they're selling an option, selling a binary, selling a spread above that level. All right, because they know with that system, it's 70% that it's not going to keep. It's 70% that the market's going to stay at that 1 deviation level or go back down and not keep going. So just that 1 deviation level in and of itself, with some type of reversal indication, is a system and a trading system all on its own that a lot of our people utilize as well. Okay, so let's talk about this a little bit. Just a quick little some math here. So 76% of the time, the market will break past a 0.5 deviation, half deviation level. Okay, 32% of the time, like I said, remember, only about 30% of the time does it break out of a 1 deviation. Only about 30% of the time will it keep going past a 1 deviation level. 5% of the time will it go past a 2 deviation level, and only like 0.3% chance, only like 0.3% of the time does it go past a 3 deviation level. 3 deviation move days are like huge, crazy flash days. Okay, does not happen often. So keep that in mind. I'll reference this again later. So about 76% of the time, the market will go past a half deviation. Only about 32% of the time will it go past a 1 deviation. All right, so I want to walk you through a few charts here, and I want you to notice something. These are pretty consistent. I think these next several slides I have as hourly bars. Okay, so you see your ninja chart here, you see hourly bars, and I want you to see something. Notice the dates up here. I popped all these screenshots yesterday. Got a handful of collection of them yesterday to be able to show you today. I didn't want to go back and try to find, stuff that was 3 months old and find no one likes to see that. I know when somebody's trying to show me something, don't go show me some hand-picked day where your little strategy or system or your little indicator or your little whatever you see on the market just happened to line up one Tuesday back in November of last year, and you happen to go find that. You know what I'm talking about? Like, I hate that. I don't want to see that. Show me something from today or from yesterday or at least something recent, okay? So you'll see on every single one of these charts I'm about to show you, I think every one of them are from yesterday. I just went through real quick, picked a handful of Forex, a couple of commodities, a couple of indices, just to kind of show you this, all right? So these deviation levels right here are what I'm going to be able to show you, what I'm going to show you at the end of this presentation, how you can download our toolkit and get access to these and load them on your ninja charts. Again, on top of whatever strategy, system, indicators you're using, you can slap these on. All right, I'm going to show you a couple different ways you can get them. So basically what happened here. All right, so yesterday on the Aussie dollar, we've got settlement here where the market opened up. And what happened right here? So the market was up here right above settlement, came down to settlement. What did it do? Came right here to a 0.5 deviation. See that? Half deviation. What did it do? Kind of bounced there, right? Then came down almost right here to a -1 deviation. See that? Candlestick went right into that 1 deviation zone and bounced. See that? Popped right back up to settlement there and bounced. So settlement all the way down to 1 deviation, bounced right off of it. Okay, and again, remember how we talked about that bounce right there at a half deviation? If I'm going short, what am I looking for? What am I expecting to happen? I'm expecting some bounces right there, that half deviation. All right, then we had a little pop there, right on down to 1 deviation, boom, bounced right up. All right, again, example from yesterday. Euro yen, also yesterday. What do we do here? Settlement popped up here. See that right here where it popped up to the, all right, settlement. There's 0.5 deviation, popped up close to 0.5. What did it do? Came all the way just below 0.5 here. Came right back up. So keep in mind here, settlement to 1 deviation. All right. Well, what happens if the market was right here, 0.5 deviation, then dropped to this 0.5 deviation? That's still a 1 deviation move, right? It does not have to go all the way to this -1 or +1 line to move a full deviation. You follow me there? Like this move here, from right here to right here, is almost a 1 deviation move, right? Because +5 to -5 would have been 1. It almost reached it, +5 here, went past -5 here. So it made that 1 deviation move. So it doesn't always mean it'll go from settlement straight down to 1 or straight up to 1. A lot of times it will, but it could bounce down, could bounce up, and then come down to right here. And that's still a full deviation move. Again, deviations are based on the settlement from yesterday with the IV formulation showing you how many ticks up is 1 deviation, how many ticks down. And I'm going to show you another way you can see this as well. I just want to kind of go through a few examples here with you. All right. Dollar yen yesterday as well. What did dollar yen do? Settlement, pop back up to settlement, right on up to 1 deviation, and flattened out. And again, what happened right here? Settlement going up, boom, deviation level. You see it right there. Literally right into that level, right into that zone. What do we get? We get a bounce. We get a bounce. Come back up, get right in here to this 0.7. Kind of had a little slowdown there. Then it kept going. All right. So again, can you see how the market's doing this? Can you see pops up to those deviation levels and kind of reverses? Can you see how when it gets to these half and sevens, you get a little slowdown there? So I hope you can see that whatever strategy or system you're using, if you're not familiar with these levels, if you're not aware of them, if you don't see them plotted on, when you do see them plotted on the chart, it really helps you know, hey, we're getting close to that half deviation level. What do I want to do? I got in here, got some good profit locked in. Do I want to get out? Do I want to take half off? Do I want to tighten up my stop? What do I want to do? But whatever I'm going to do, I'm pretty much expecting to start seeing some resistance now. I'm going to know, hey, what's going on here? You know, you're in your trade and everything's going great and everything going in your direction, and then it kind of starts to tweeter there, and it starts to come against you, and your heart's racing, and what do I do? You know, it's getting close to my stop. Do I leave it? Do I get out now? What do I do? Well, you know ahead of time, hey, I'm going to probably start seeing that here in a minute. Probably start seeing that. It's expected. It's not a surprise. It's not a, oh crap, what's going on? What do I do? You know ahead of time, things are good, things are good. All right, I'm going to start seeing that here. What do I want to do? I know ahead of time. Well, maybe I want to take off half and leave the other half. Because what do I know? I know that if I'm still getting good directional trend indications from my indicators in my system, and I've still got a strong uptrend going on with my strategy, what do I know? I know that 76% of the time the market will do what? Go past and break through the half deviation level. So I'm going to expect a bounce in resistance, but I'm also looking at a 76% chance it's going to keep on going, and it did. All right, let's look at another example here. Pound dollar, also yesterday's date. Settlement, this is just a perfect example. Settlement, see line, settlement line, boom, 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 right into that one deviation level, all the way back down. See that? I mean, just a perfect one deviation move and back down. Just like I was saying, we have plenty of guys that use just this, or mainly just this alone as a system of markets at one deviation, boom, I'm going to sell. All right. Now, I personally like to see something else with that, you know, whether it's combined with some other type of short term. Remember how I was showing you our trend catcher system, which is the arrows up and down, looking at the market movement, market direction, showing you the quick direction of the market, like the most immediate trend of the market. It's not looking at hours and days, it's looking at a few ticks at a time. What's the market doing? Well, if I get up there to one deviation level and I'm getting some good candles and the market's kind of slowing down up there and looks like it's starting to come back around, and I've got some indication of a turnaround, even on a quick, quick trend system like that, all right, then maybe I'm going to sell right there. Maybe I'm going to sell an option right there, a spread, a binary, a futures kind of whatever it is you're trading. But just a perfect example, one deviation move right back down. And again, guys, these are not handpicked. These are all that I'm showing you here from yesterday. How about the DX? Anybody trade the DX, the dollar index? What did it do yesterday? We had some settlement, kind of bounced right down here, almost to the one deviation level, pop back up to settlement, kind of bounce, 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 and boom, moved all the way up one deviation level. Okay, see that? Even on the DX there. Again, you can use this on stocks, Forex, commodities, indices. I'll show you a bonds chart in a minute. Again, it plots over 22,000 different instruments as far as, Forex and stocks. I mean, if you trade Google or Microsoft, whatever, okay, these will plot on there as well. Overseas stuff as well. Here's the FDAX. Anybody trade the German DAX? What do we have yesterday? Settlement. Look at this. Settlement. Boom. Came down here. just past the -7. Then what did it do? Boom, boom, popped all the way up here to the +7 at the end of the day, 4 o'clock. See that? So it came down, and from here to here, boom, a little more than a 1 deviation move. See that? And after it moved down here, and it got back up to this level here, back to settlement, what it started doing again? It started bouncing. All right? Got right back up here, full deviation move to 0.7, bouncing again. So it doesn't matter what it is, whether it's overseas indices, U.S. indices, and so on. Oil. I want to show you something here. Very interesting. This is oil. Okay. Right here, I have 729 up here, but look, 7 charts over here. This was not Wednesday. This is Tuesday. I'm going to show you 2 days of oil here, and I'll show you why. Here is Tuesday. What we'll do, settlement all the way up to where? 1 deviation and bounce. See it? Right there, popped a little bit below, popped back up, bam, right up to this 1 deviation level, leveled on down and done for the day. Perfect example again of a 1 deviation move. What about yesterday though? Whoa, what's that? We haven't seen one of these yet, have we? What did this one do? Settlement, where did it go? It went 1.5 deviations. Okay, so it went through that 30% rule. Remember, 70% of the time it'll stay 1 deviation or less. Only 30% of the time will it bust through. Here's a perfect example of a larger move. Any ideas why that might have been? Why we might have expected that to happen yesterday? Why that's really not that big of a surprise? What happened on a normal day, on Tuesday? What did oil do on Tuesday? Boom, came up, +1, 1 deviation move and a bounce. Yesterday was what? Wednesday. Anybody know what happens on Wednesdays about 10 o'clock every Wednesday that might affect oil? Yeah, exactly. Weekly oil inventory report. So I want you to see that right there. Are we really surprised that on Wednesday we got more than a 1 deviation move? Or does it kind of make perfect sense why it was a little bit larger than normal move? Okay, that's another thing to see. Hey, Wednesdays we got oil inventory report. Thursday we got natural gas inventory report. A lot of Thursdays, Wednesday and Thursdays, all kind of other news sometimes with, Fed funds and unemployment and housing, whatever it may be. Okay, and we can, of course, we know on those days we can expect a little bit more moves, and it's nice to be able to see that. Hey, we might get a little more than a typical move today because of news. What does that mean? We know 1 deviation is normally 70% of the time, but today could be a little bigger. Well, what's bigger? What is the next level? What's kind of the next level that things might go to? And look what it did, like perfectly, like to a tick, it looks like, right to that 1.5 deviation zone and then bounced right off of it. So again, what's realistic? Hey, the market's going strong. Market's coming into 1 deviation level with a lot of power, with a lot of orders, with a lot of volume. I think it might keep going. It might make that 30% of the time bust through. It might keep going. Where would it maybe go to? Well, what's the next level? 1.5. What would be a good profit target zone? What would be the next zone where to tighten up stop? Exactly almost to it where it went. You see that? So I know I spent a little more time on this oil chart, but I wanted you to see that, and I hope that maybe helps put some of this into perspective of these little bit larger days where maybe there's just crazy volume, or there's reports or earnings or inventory, whatever, and it's breaking through some levels with volume. Where is the next place it might go? Otherwise, we don't know. Without these on your charts, like, I don't know. I don't know where it might go next, but it's just going. I don't know where I should put my stops. I don't know when I should start trailing. I don't know what a realistic target should be. I just know the market's going and it's great. Hey, cool. Okay, but you see how that's very helpful to see those levels. Okay. So again, I've showed you some Forex pairs. I showed you an overseas German DAX. That was oil. Here's gold. Now, you see something a little different on this chart now. Okay. I've been showing you our deviation levels. All right. Well, we also have another indicator which will be available to you for free. All right. These two deviations, the deviation levels are what I'm going to show you how to get for free. But you can plot them two different ways. You can plot them as levels on the charts like I've been showing you. All right. Settlement plus 0.5, plus 0.7, plus 1, so on. We also have one called deviation. What this is, it's basically, remember how we talked about just because the market might be at settlement? Let me show you a different example. Let's look back here. Okay, remember we talked about it back here. So here's settlement. The market went up to plus 0.5 deviation, right? Came back down to settlement, and then came down to -5. So from +5 to -5 is a 1 deviation move. Does that make sense? That's a full deviation. Just like from sub to 1 would have been a 1 deviation move. Half to -half is a 1 deviation move as far as number of points. Does that make sense? Does everybody follow what I'm saying there? I might not be explaining that perfectly, but it may not have touched the -1 or +1 line, but you all get what I'm saying. From here to here is a full deviation move. All right. So it's nice to see these lines plotted, but it's also nice when you know, hey, that is actually a full deviation move. And that's what this indicator here does. See over here, 0.2, 0.5, 0.6, 0.8, 1. This line here, market's going. Look, see as this line's going up, going up, going up. See as the market's moving, and as the market keeps moving, it's still going up, going up. So basically, at this particular level here, it's almost getting to that actual 1 deviation move because it came down almost to 0.5. See it? And then it came back up almost to 0.5. So it's like at a 0.9 here. This line got all the way up to here. Does that make sense? Okay, everybody follow me there? So you can see it a couple different ways there. You can see it as these actual lines, or you can see it this way, or you can see both. That makes sense? And the reason, okay, that makes sense, right? What that line is. What is all this red and green stuff? All this is plotting opposite, meaning this is getting all the way up to a 1 deviation move, saying all you want to do right now would be sell. Now, don't look at that as a system or a buy and sell indicator. It's just saying right now you'd probably want to be looking for sell signals, not buy signals. Because why do we not want to be buying right here? Most likely, because we'd be buying at the top. That makes sense? Again, remember I showed you an example earlier of 1 deviation move, and then even our Apex systems that we use gave us another entry indication. We probably don't want to take that because we'd be entering at the top. Here's YM. Anybody trade the Dow? Here's the Dow again from yesterday. Settlement was over here, popped down just under settlement, went right up to, so it popped down. Oh, let's see here. Yep, popped down under settlement, came right up to just over +7. Take that +7, plus this little bit here, boom, pretty much a 1 deviation move and bounce right off of it. And then what happened after it came down here and came up, here's there around settlement, pops up to 0.5. What happens? little tweeter in there, pops up to 0.7. Right up here, gets about a 1 deviation move for the day, levels on off. All right, so there's an example yesterday on the Dow. ZB, anybody trade ZB bonds? Check them out. Actually, here's 2 days on one screenshot. So we've got yesterday, Wednesday, and Tuesday. So Tuesday and Wednesday this week on bonds. Settlement down to -1. Pop up. 1 deviation move. See it? Kind of pops up here. And settlement, what does it do? Come down the next day. Boom. One deviation move on bonds. It's right there. Okay. So over and over again, guys, I know I'm kind of going all this. But that's why I'm showing you so many of these. Whether it's, I mean, I've showed you Forex, some commodity pairs, bonds, overseas stuff. So I want to show you how you can get these on there. Brad says, I missed the beginning. How do you compute 1 deviation? Brad, I know they're recorded. You can go back and see, but real quick in a nutshell. So just once again, guys, right here, what do these levels mean? 76% of the time, the market will break past a half deviation level. Only 32% of the time will it break out of a 1 deviation level. So we know that 70% of the time, the market will not go past that 1 deviation level. Only 5% of the time will it break out of 2 deviations, and only 0.3% of the time will it go past 3 deviations. Those are the crazy flash, terrible days. So, Brad, basically in a nutshell, and I know this is being recorded, but in a nutshell, what these deviation levels are, these are not your typical like historical deviation levels. All of us have used or heard of, deviation levels. What that is looking at the past performance of the market, to come up with expectations of today. That's not what we do. We actually take the IV from the options market of that particular instrument. We plug that into a special deviation formula that we use that plots these numbers. And it basically plots it, it determines it from the settlement of yesterday, all right, whatever the settlement was, and then looking at the IV and pricing of options for the next day. What is that IV? Meaning, what does the market think the market's going to do tomorrow? What are the big guys saying? What are they hedging off for with options? What kind of move does it look like is expected based on this pricing and IV of options? Put that into a special formula. It spits out and calculates a number from settlement up, like a 1 deviation move from settlement up would be X many ticks up, from settlement down would be X many ticks down, and plots all those levels. Okay, and again, it's not looking back historically, it's looking forward to those expectations. Okay, so we're kind of running on time here. Brad, I hope that helped. Heinz, I can show you where you can get some more information on that and where we kind of walk through step by step a little bit more. What I want to do here now is get you hooked up with these so you can start using them like right now on your own charts. Okay, so what you want to do is hop on over to apexinvesting.com. All right, that's our website, apexinvesting.com. Right here, it'll say join free now. If you click that, again, this is no obligation. There's no credit card number. We're not going to be blowing you up with stuff. None of that. All right. All you got to do is fill out your first, last name, email address, confirm it, choose a username, choose a password, confirm your password. That's it. Okay. Well, we do need city, state, and all that, and then just hit agree. Okay. So literally, that's the first step you want to do. If you already have a membership with Apex, whether you're a paying member, whether you're a free member, doesn't matter. But if you already have a username and password through Apex, then you don't need to do this step. You're already good. Okay. But take a minute. It'll take you two minutes to fill this out. So fill out this page. I agree. Boom, sign up. All right. So you have your username and password with Apex. Make sure it's something you remember because you'll need it anytime you log into our website, and you're going to need it here in just a moment when you download the toolkit. Okay. But join free now. Sign up with Apex. Once you have your username and password, okay, you'll sign in with that into the site. That will take you into our website here. This gives you a lot of information. Our website, we're an education company. We're kind of community of traders helping traders. We have, yeah, I mean, we have some systems and software and some live trade rooms and all that, but we literally have hundreds and hundreds of hours of free education in here. You can go into our trading questions forum and you could get lost in here. All right. I mean, there's a lot of information, but some of it's very, very helpful. I'll just point out a few things to you here. I'm not going to spend forever on it, but you can go through our forum, our general trading, psychology, resource management, schedule, underlying markets, so on and so on and so on. And down here we get into strategies and systems. We have several step-by-step systems in here. You can go through and watch training courses, videos, webinars, showing you how we do all of our different systems. Some of those systems that I covered with you earlier with some screenshots. Right here towards the bottom it says watch webinars here. Great place to go. All of our most recent webinars are uploaded here. You know, some of our radio shows, if you trade Nadex, there's all kind of stuff there. Okay, so that's one area there you might want to look at. But what you want to also look at right here is deviations. Okay, I mean, feel free to check out our site, look at all this other stuff. But what you're focused on right now, trying to get, are deviations. Okay, so if you go to this tab, the very first tab is set up NinjaTrader and get data. You've already got that. Okay, what you're going to want to do here in just a second is install the NinjaTrader toolkit. All right, but also keep in mind, if you go through here, this will show you how to add the indicators to your charts. Okay, and how to, there's a video you can watch right there. Okay, Heinz, you were asking about, can you repeat the red and green segments in the deviation indicator and how to do that? Here's a video of it right here. Okay, remember I said I'd show you where you can get that. Now that video is about 27 minutes because it covers kind of what are deviation levels, how do they work. It's kind of a brief presentation of what I did here today, but it actually walks through and shows you. Once you have the toolkit installed, it literally shows you how to install the two indicators on your chart, which if you use NinjaTrader, you know how to install it. You just click indicators, find it, and click it. All right. Once you install our toolkit, what you're looking for is the indicator called deviations. That's the one that kind of puts the histogram at the bottom, or deviation level, which is the one that plots the level on your chart. So yeah, click it and press OK, and it comes up on your NinjaTrader chart, right? We all know how to do that. Pretty easy. So everything you need is under this deviations tab. Okay, so that video right there, step 3, will show you exactly how to add it to your chart, and it'll kind of give you some more information about, like that we covered today. It'll show you how to use some of the settings, or if you want to change colors, whatever you want to do. Otherwise, just click it and hit OK and slap it on your chart and get moving. Okay, there's some other information down here. Deviation level trailing stop system. All right, this is a great forum post here, and with screenshots and notes. As far as, I think there's actually some videos on here too. Yeah, there's a video. Some great information about how to use deviations in your trading, how to use for trailing stops. We actually call it the deviation level trailing stop system. Okay. Deviation profit target webinar, we talk about how to use them for taking profits, how to use them for figuring your profit target goals. Like not only can you get these on there on your chart, but there's a ton of information here that you can go through and read, see screenshots, watch videos, tutorials of various ways that you might be able to help have these help you with your current trading system by adding them right onto your charts. Okay. MK, what difference is there between historical and your expected deviations? That's what I've covered several times here. This is not, our deviation levels don't just look back at, past market movement or past highs or past lows or past, levels or support level. It's not looking backwards, because what happened yesterday doesn't really affect what happens tomorrow necessarily. And what it's doing is we're looking at the IV of options, the IV and pricing of options for that particular market for the next day. So if we're talking about oil, for example, and our system is calculating the deviation levels tomorrow on oil, it's not looking at some high or low of yesterday. What does that matter? You know what I mean? Because there's news events, there's historic events, there's inventory reports, there's whatever. It's what, after the settlement of oil today, what is the price and IV of options for oil tomorrow? What are the big guys doing? Are the big guys buying a bunch of options, selling a bunch of options, hedging this way, hedging that way? What is the volatility of the market? All right, where are the options being bought? Where is the expected move, and so on and so on. It gets pretty complex of a formula they use, but it's basically taking the IV of options for that particular market, put in our special deviation formula, and that's what's determining those going forward. So it's not just looking at a high or low or resistance level from yesterday. It's what is the market saying that the market's going to do tomorrow. It's the market. It's people putting their money where their mouth is. Okay, for tomorrow. Okay, IV is an implied volatility. Okay. Okay, so what you want to do, again, is hop on over to apexinvesting.com, create a free username and password. Once you do, you will go right here to the Deviations tab. And like I walked you through all the different information there, okay? Then what you want to do is click right here, install the Apex NinjaTrader Toolkit. It's very simple. And right here, click this video, and it will literally walk you through how to do it. Okay, you literally just hit download and install, and it'll pop up. You install it, and it'll pop up and run some stuff. Ask you to click OK, and then once you have NinjaTrader up, you do need NinjaTrader closed while you're installing the toolkit. Okay. You need NinjaTrader closed while you're installing this, and you'll just click OK, and then it'll tell you install. You click install, it'll run through and confirm, and then it will pop up in a minute. For you, I'm already signed in, but at this point it would have you input that username and password, that free user and password that you made with Apex, just so it could register you, and it'll show you. You won't see all this alpha and beta, these are testing, but it'll show you, hey, install toolkit, and you'll click OK. It'll run for a minute, and you're done. Okay, and you should only have to do it one time, and then when you pull up Ninja after that, it'll connect with the toolkit. You'll be able to go in and click deviations or deviation levels on your indicators. And if you have any questions on how to do it, it's right here under number 3, add deviation levels and deviation indicator to your chart. Okay, so I'd walk you through it all, but we're kind of running out of time here. Just wanted to show you that where you could find that information. Okay. So there you go, guys. Somebody's asking, what's the 2 alter price? Is it really free for? Yes. No. Deviation levels are free. Okay. It's not a trial. It's not a trial version. You have access to exactly what you showed me used there. Now Joe's asking, is this a trial version? No. Now the toolkit, our actual toolkit itself has all of our stuff in it, all of our indicators, our system, our programming. Yes, that's only available to, paying members, depending on what membership that they're, that they're with, as far as what systems and indicators they're getting. But you have to install the toolkit in order to get the deviation. Anyone that with a free membership to Apex can install the NinjaTrader toolkit, the Apex toolkit, and get the deviation levels plotted on any charts, like 22,000 instruments. Okay, that's not a short term. That's not a trial. You've got it for life. Okay, we don't charge for the deviation levels. Anyone can use them. They're there to help you. Okay, but yes, just because you download the toolkit, does not mean you'll have access to every single thing Apex has for free. You know what I mean? Certain things are part of our other memberships, but the deviation levels are free. Like, you guys literally go right now, go to apexinvesting.com, get a free username and password, go through those steps right there, just download the toolkit like you just saw me do. It took like 2 minutes. Open up Ninja, open up your chart, right click indicators, find deviation levels and click it, and they'll plot. Like, you can use them right now. You can use them tonight for your trading. And any other questions you have, feel free to go through this deviation tab here. Most of those questions will be answered. There's videos, there's step-by-step instructions. Anything you need should be right there. If you do have questions, though, you can go to the chat box here if somebody's online there, or right here under the questions tab, right here, help desk. You can submit a help desk ticket. We're happy to help you with any questions there as well that you might have getting the deviations going. But otherwise, guys, that's it. I really appreciate you being on today and hearing me out here. I hope those examples kind of helped you see the power of these deviation levels. Again, I wasn't showing you some random example from 2 years ago on a Tuesday that happened to work. Every single one of those was from yesterday. I just didn't, I would have done today's if I had time to put the PowerPoint together, but I did it last night, getting ready for today, and I showed you that day's stuff and how it works, bouncing off of those levels, trailing your stops, not taking entries when you shouldn't. So add it onto your charts, add it onto whatever system you're using, whatever trending system or scalping system. Like, we always love to hear how it's going for people. So, different people find different ways to use it, but slap it on there and let it help you with your own system. And we wish you the best. Hit us up over there if there's anything at all that we can do for you. So I really appreciate Justin and
All right, just want to come on here at the
Wesley,
end, give a special
NinjaTrader,
thank
for
you
having
to
us today,
John and the rest of the team there
appreciate
at
you guys
Apex
being
for
on.
putting together that
Just hit us up
presentation
over
for you
on
guys
the
today.
Apex website if we
Again,
can do
we're always
anything else
pleased to
for you.
sponsor these
Wes,
weekly
I'll turn
partner
it back
events as
over
a
to you.
value-added service for you, our clients. So if you do find value in these events, we hope you will be able to attend them on a regular basis. Also, I wanted to provide you guys with the link one more time here for our platform educational events you can log into throughout the week if you'd like to learn a little bit more about using the NinjaTrader platform itself. Definitely feel free to check out that schedule, learn a little bit more about different specific areas of the platform itself. Again, we do appreciate the time you spend with us. Enjoy the rest of your day, and we do hope to see you in future webinars. Happy trading from all of us here at NinjaTrader Ecosystem.